Welcome back. You're listening to Financial Climbs, and today I've got some great surprise stocks in store for you. These five stocks could explode in June, and most people aren't watching them. From Broadcom to Uber, each has a key catalyst that could spark a breakout. So, first up is Broadcom. This is a tech giant that's turning heads in June. Imagine a company trading at about $630 per share with a staggering £250 billion market cap. Broadcom isn't just a player in the semiconductor world anymore. It's a powerhouse driving innovation. You can see with a PE ratio of 25 and earnings per share of 25.2, investors are paying a fair price for the dependable profit power on display here. And if you're excited by growth, then a steady 10% revenue increase proves Broadcom is constantly evolving. Now, for all you dividend hunters out there, a 3% yield means you're not just riding the growth wave, you're getting paid too. Financially speaking, their low debt to equity ratio of zero point 0.5 shows a smart balance between reinvesting in future tech and keeping risk in check. The technical charts are lighting up with an uptrend and an impressive 4.0 analyst rating, giving investors a clear thumbs up. But here's the real ticker. Broadcom isn't just benefiting from solid numbers, they're at the forefront of next generation trends like 5G, AI, and data center technology. Think of them as the secret sauce powering our modern digital lives. From driving faster networks to ensuring our devices stay connected, Broadcom's innovations are everywhere. If you're after a tech stock that blends stability, growth, and steady income, this company is a must. Stay tuned because there's even more exciting stock action ahead. Broadcom isn't just a buy, it's a blueprint for what the future of technology looks like. Next, let's get into a brand that's as much about lifestyle as it is about earnings, Lululemon. Trading at around $350 per share with a £40 billion market cap, Lululemon has built an empire on the sweat and style of premium athleisure wear. You see, while the P ratio of 45 might sound quite steep, it's a nod to the sky high expectations for future revenue. An EPS of 7.8 confirms that every dollar of those premium prices is translating into profit. But the magic really happens with an explosive 18% revenue growth rate. This is a company riding the wave of wellness and trend-setting fashion. Sure, there's no dividend here because Lululemon wisely reinvests every bit of profit to push further into new markets and innovative product lines. With a tight financial structure evidenced by a debt to equity ratio of just zero point 0.3, Lululemon is in no hurry to overextend itself. The technical chart shows strong energetic uptrend, matched by a stellar analyst rating of 4.2. And honestly, who doesn't love a brand that's both a style icon and a financial winner? Whether you're hitting the gym, running errands, or just embracing a healthy lifestyle, Lululemon's blend of brand loyalty and rapid, sustainable growth makes for a compelling buy. Plus, it's a brand that's reshaping retail with innovative digital strategies and community engagement. If you're ready to flex your portfolio with a stock that's as dynamic as your lifestyle, Lululemon might just be your favorite pick for June. All right, let's talk about a brand that's equal parts grit and glamour, Dr. Martens. At $150 a share and a market cap of 3 billion, these iconic boots have become more than just footwear. They're a cultural phenomenon. With a PE ratio of 30, investors are betting on future potential, even though the current EPS is 2.0. But here's where it gets interesting. This company is rocketing ahead with a 12% revenue growth rate, proving that nostalgia and innovation can truly walk hand in hand. Dr. Martens reinvests every penny into expending its legendary appeal, skipping dividends in favor of future growth and market expansion. Even with a debt to equity ratio of zero point 0.8, The company manages its finances like a pro, fueling a sustained uptrend reflected in both technical charts and a solid 4.0 analyst rating. What really sets them apart is their blend of timeless style and modern reinvention. They're not just banking on their legacy, they're evolving it, deploying fresh product lines and leveraging digital marketing to capture young audiences, all while staying true to their rebellious roots. Imagine owning a stock that represents both counterculture, cool, and solid business fundamentals. Dr. Martens is that rare fusion. Thanks to smart branding and relentless innovation, these boots continue to stomp their way into new markets. And for anyone looking to add a bit of edge and excitement to their portfolio, this is a buy that's as iconic as the brand itself. With each step forward, Dr. Martens proves that sometimes standing out is the best way to march ahead. United Health is a £500 billion healthcare powerhouse, driving innovation in insurance and medical services. Solid earnings, PE of 22 and EPS of 23.2 make it a reliable play, backed by 8% revenue growth and a 1.8% dividend, steady returns in a growing industry. The real edge, tech driven healthcare, is the future. And UNH is leading the charge with AI, personalized care, and digital expansion. A strong buy for long term stability as healthcare keeps evolving. Lastly, we have Uber. Uber is expanding beyond just ride hailing, evolving into a global mobility and logistics powerhouse. At $75 a share, 176 billion market cap, is scaling food delivery, freight, and autonomous tech. PE of 28 and an EPS of 2.7, alongside 22% revenue growth, all signal strong expansion. Its AI driven strategy and digital first approach are reshaping transportation worldwide. It's a clear buy for investors betting on the future of mobility. And that wraps up my top stock picks for June. If you're looking to build a strong portfolio, these companies are definitely worth watching. But remember, investing isn't just about picking stocks, it's about strategy, timing, and staying informed. If you enjoyed this breakdown, make sure to smash that like button and subscribe to Financial Climbs so you never miss out on fresh market insights. I'm dropping deep dives like this every week, helping you navigate the financial world with confidence. Which of these stocks are catching your eye? Or do you have a sleeper pick I should cover next? Let's keep the discussion going in the comments below. I want to hear your take. Stay sharp, stay invested, and keep climbing toward your financial goals. I'll catch you in the next one.